As I promised, every Wednesday we're going to go through a trade wisdom segment to help folks who are learning or doing their best to make the turn. I don't like using the term trying. So the segment is champion on sim but trading live on whim. Whim defined here, a sudden desire or change of mind, especially one that is unusual or unexplained. Does that ring a bell with live trades? You set out your plan, you go to trade it, and all of a sudden whim takes over. Generally, in my experience as a prop owner, trader, and so on, the major culprit is an emotional issue. There's constantly an outward focus on information and technique, and instead of looking, there's a certain point where technical information is not going to help you any further because you're not executing on it. So you can keep jumping from one indicator to the next or one course to the next, but the problem is mastering one and becoming confident in the way it responds or the market responds to it, whatever your approach is. So there's this constant with people that I've seen who are having this issue. There's a constant focus on going outwards and looking for the next thing to cover, to mask, or to work on the issue of them not being able to execute. So you can have the best trading system in the world, but if you don't execute it on a consistent basis or don't understand it and understand what the risks are associated with it, it's really a moot point. The problem lies in the emotional composition of the trader. The trader allows themselves to respond to a hardwired emotional response. We all have this in us. It's called the chimp mind. There's a great book on this called The Chimp Paradox. You can get a link for it on my website. But your emotional response is to a market that at the beginning, when you first started trading, you might have not been aware of the risks. We call that stage one of competence. And so you went out there fearless until one day you watched your entire account melt down, or you watched yourself melt down, and then now the market becomes this dangerous, hurtful, and threatening entity. And as such, your response becomes an emotional one, and so you're not able to continue to follow your plan once you go live. None of that exists on sim, so you're just an amazing trader on sim, just swinging 300 lots and making millions of dollars on sim. None of that exists in real life because emotions come into play. The market does not trade so much different on sim as it does live, except that the fills are not realistic. So you can penalize your sim results by a tick on your limit orders to make sure the market trades through, but the results are still unrealistic on sim. So the only difference is in between your ears. So what you'll have to do, what's recommended, is set out what you'll do before the market opens. This is where the hypotheses that I talk about every morning come in. And so when you set out what you want to do, you're not listening, you're not being pulled like a ship without a rudder in different directions by different speakers. You have your plan, and your job is simply to monitor what is happening and how the market's responding to the levels or the areas that you expect it to trade. This is what I do every morning in these Trader Bites. Wait for the market to either confirm or deny your ideas. If your primary hypothesis is being denied, look to your second. If the second hypothesis seems to be working, the only step remaining is to find an area to trade against that would give you a good risk reward, and this takes time to do that on the fly, to do that on the hard right edge. But ultimately, the biggest problem I see with traders that I've backed and with traders at stage 5 who are learning to make the turn is this issue here. Knowing that every trade, as good as it looks or as bad as it looks, has a 50-50 outcome. Every single trade. You cannot get away from a 50-50 outcome regardless of the win rate of a system. I know that causes a lot of discussion and controversy, but this is the truth. You can only expect that you don't know where the winners or losers are going to come in an infinite data set, which was what the market is. So even if you have back tested your idea and it's 83% winning, you don't know the 17% of losers, where they fall into the data set or in the population. So you have to understand that every trade has a 50-50 outcome. So interfering with a trade, and worse yet, not assessing the risk or not deciding on the risk of a trade, is just a gamble. So the next thing we push is to enforce a mechanical trade management scheme, meaning if your platform can support it, put in your OCO orders or strategy orders and just keep your hands off the mouse as opposed to responding emotionally. The other thing I recommend traders to do is to look away from the dome and focus on the thing that caused you to take the trade, meaning your charts or whatever indication you use. Focus on that, because as it unfolds, you're not being trapped by the spoofing and the bids and offers that are coming across on your depth of market. Look at the chart and see how it unfolds, and constantly ask yourself, has anything changed? Has there been a change? Just because the position is going against you or the market's moving against you a few ticks in a position does not mean that your idea has been canceled. If the overall picture on the chart that generated the trade hasn't changed, then you should not be interfering with the trade. Micromanaging trades is just a very tough curse to get rid of, because it's a habit forming thing, and it's pushed by emotions, and traders just aren't executing what their plan is. Write down what you did. I cannot overemphasize this. Write down what you planned. That's your before market. And write down what you did. If you write down what you did, you will not have confirmation bias. Your brain tends to forget those things you wish to forget, or that don't serve its immediate purpose. If you write these things down, and I suggest something like Evernote, a program like Evernote or OneNote to do this. This allows you to later read it and improve, which gives you your goals for next week, which I've talked about in the past. And then finally, trading is a continuous process. It has many setbacks, many leaps forward, it's just, you go through a lot as a trader, and it's not a linear process. We don't start and then we see our improvement do this. Trading is much more of a this sort of thing, and it gets wider and wider as you increase your size. You hope the lows are higher, but the highs should be a lot higher as well. And it's a performance sport, and you just need to stick with it for it to work out. Hopefully, good luck. I hope that helps you today. I'll catch you tomorrow.